Snap Inc., which is the parent company of Snapchat, has reportedly filed for an initial public offering with a valuation as high as $25 billion. But does this IPO make sense? Let's head to New York to find out with Santosh Rao. He's the head of research at Manhattan Venture Partners. Santosh, good to be with you today. Thanks so much. And does this valuation make sense, but does it also make sense to go public?
Yeah, good afternoon. Thanks for having me. Yeah, I think the valuation makes sense if you look on a relative basis. Facebook went out at 26 times sales. So if they go at 25 billion, that's roughly 25 times 2017 sales, which is expected to be around 1 billion. So in that sense, I guess it...
Sorry, you said what multiple on sales?
No, 25 times sales.
Yeah.
Facebook went out at 26 times.
Okay.
So this one, if they're valued at 25 billion, that'll be 25 times 2017 sales, which is expected to be roughly 1 billion. So I think that's a pretty high multiple. Remember, Facebook was profitable at that time when it went public. So you have to discount that. So I expect valuation closer between 20 and 25, just because of 2 or 3 things. I mean, the user metrics are solid. They're growing revenue at roughly 3 times, 300%. It was 350 million this year, going to 1 billion next year, and so it's really growing fast. The engagement levels are high, and just new content being created. So I think the growth is there. So if you're buying this company at 25 billion, you're buying for the growth trajectory that this company is on.
But Santosh, if we think back to the tech bubble, 1998, 1999, I was working in equity research, taking these companies public, and I mean, if I remember correctly, things were maybe nothing more than 10 times sales. Now we're talking 25, 26 times sales. So even though they might make sense, if you can even use that word in the context of what we've seen over the past couple of years with Facebook, et cetera, let's think back, because history can repeat itself. So how do you compare Snapchat, the business, to what occurred during the tech boom and, of course, the tech bust?
Yeah, I think this is little more than the companies at that time. This is a real company. It's become a very good platform. It has all the 3 big elements. It's visual, it's social, and it's a good media platform. So I think the slight difference here, it's become a powerful medium. During the elections, more people got their news, the millennials, more people got their news from Snapchat than they did from Facebook, according to one market estimate. So I think it is a very powerful medium. The fresh content being created every day, the engagement levels are as high as Facebook. So I think it's a little different from what we had at that time. This is a real company. But coming back to your valuation, 25 times sales is very high. 10 times is more reasonable. So I think to get 10 times, you really have to go out to maybe 2018 or 2019. So to the extent that you believe this company has that growth trajectory, it can maintain that momentum, I think you buy for the future. I mean, you don't buy on a near-term basis on the valuation. You're buying really for the growth and the prospects ahead. So
if in fact we see the IPO come about, we'll have to get you back on to see what the pricing range is, what the true valuation is. But do you think, bottom line, from a fundamental perspective, that they can in fact differentiate themselves enough amongst the competitors, and there's nobody else coming up that would compete them away?
Well, there is competition. Facebook is trying to do everything that Snapchat is doing. But competition is going to be there. So they need to maintain that. And that's the big risk. You're not going to get any new investors, the faint of heart in this one. You really have to have an appetite for risk here. You're really betting for the next Facebook, if there is one. A lot of people missed out on that. And remember, Facebook went out at $38, but it really pulled back initially. But this one, and that's because they didn't have a mobile platform, no mobile offering. This one is mobile native. It has all the elements that you need in today's market. It's video, it's mobile, it's native, the content, about 10 billion videos loaded every day. About half the millennials are on this every day, or rather 2/3 of the millennials. So it's like amazing numbers out there. Can they maintain it? They can. They need to keep the content fresh, and they're broadening the platform. They're adding hardware to it. So I think they want to be more than just a messenger. To that extent, I think they can maintain that. The risk is there, but they have the ingredients to be a good, successful company.
All right, we'll leave it on that note. Nice to see you today. Thank you.
Thank you. Thanks for having me.